the Fed giveth, the Fed taketh away. It's true. The Fed gave all of that liquidity, all of those low interest rates, and now they're trying to take them away. And let me tell you, if you're trying to take something away from your child, they just go, oh, okay, here you go, no problem. No, they fight you, right? Which is probably why you wanted to take it away to begin with. So is it possible for them to hold these markets at these levels and gold go up? Yeah, that's possible. But understand too, when you're talking about the spot gold contracts, that's also controlled. And even at 1860 or wherever it happens to be at this moment, why isn't it down at 300? It's not down at 300 because there are too many buyers and it really overwhelms their ability to suppress the price that low. But I'm not waiting for Wall Street to tell me what gold should be because I already know the answer to that. It's going to its true fundamental value, but it will do it when the powers that be need to regain your confidence. They will do it when they have to do that overnight revaluation because there are just too many strings. $20,000 for a pack of chewing gum. That's when that will happen. You know, this is definitely a global issue. Eurozone's long stagnating wages start to rise as cost of living soars. And this is the biggest fear for the central banks. After a decade of little to no pay growth, we've had it longer than a decade in the U.S., workers are finally starting to see higher settlements. And the worker demanding higher wages threatens that wage price inflationary spiral. So all the costs of goods go up like we're seeing, and then people are demanding more money. And we're in a tight labor market anyway. A lot of people have left the labor market. This is a big problem because if corporations want to hire these people and you know, there's lots of for hire signs out there right across the entire, you know, I mean, all corporations and all businesses pretty much are looking to hire people, and it's really challenging. So they have to pay more. Well, they have to pay the workers more. Well, then that cost has to translate into, you know, target into the goods that they're selling. And then that puts even more pressure on. And so you have wage increase, price increase, wage increase, price increase. It's a nightmare for central banks that are trying to control the inflation that they created, even though they don't admit it. Raising interest rates is not going to solve the problem of inflation because it's not going to create more food. And a lot of these companies that really boomed over the last couple of years and ordered in more products, well, guess what? They've now got a backlog, which Wall Street and CNBC, they were talking about it this morning. I thought it was really interesting. They said, well, this should be good for inflation because now they're going to have to sell these excess Peloton bikes or what have you at a better price, and that should tamp down the inflation. Can't make this stuff up. It's so funny. Because as the public becomes more aware, and a lot more people are becoming a lot more aware, and they're trying to protect themselves. But if you're listening to your stockbroker, well, what are you doing? You're buying a trust, a GLD, which is not gold. It's a trust, and it's based upon the manipulated spot price. But there are a lot of people that are moving into GLD because they think that's going to protect them. It won't. It's paper. And it's a trust. It's not even gold underneath it. 2009, when they started the QE. And everybody said, oh, this is going to be hyperinflation. Well, it was hyperinflation because they hyperinflated the money supply. They did that on steroids in 2020 as well. They hyperinflated the money supply. The fact that they say that it didn't cause general inflation, number one, is garbage because it did. Prices for pretty much everything are a lot higher today than they were in 2008 and 2009. But where that inflation was really felt was in the bloated stock markets, the bloated bond markets, and the bloated real estate markets. But things don't all just go up to the sky. There always has to be a level of correction. And that's where we are right now. Now, there are a lot of people that feel comfortable and just fine in bullion coins. And everybody's always got to do what they're comfortable doing. But I think in addition to just doing what you're comfortable in doing, that it would make some sense to do a little bit of research. Personally, that's not the kind of gold that I buy. And that is because it's not always been true, but it's been true for a while, and that's because of where we are in this trend cycle. So I personally find it hard to believe that they will have gone through all of this and then at the end go, we'll let you keep your gold. Maybe they will. Maybe they won't. I don't know the answer to that, but I'm more comfortable in the collectibles because then it doesn't matter whether I'm right or wrong. And anytime I can make that choice, that's where I'm going anyway. And by the way, when you stop and think about it, most gold that individuals hold is held inside of retirement plans and their IRA, and that's easy to access. Because what we definitely know is if you don't hold it, you don't own it, and your perception does not mean anything in a court of law. I like it near me. I like it as private as I can get it. And I like real money. That's the solution to this current problem. You've got to hold your purchasing power. You've got to hold your wealth because there are going to be a gazillion opportunities that are going to present through this next crisis. We are at a very critical point. I told you at the beginning of the year, 2022 is a very pivotal and critical year, and we're coming up to 2023. This is the time to get ready. This is the time to not procrastinate. If you're still holding wealth in the markets, then when you have a big update, take advantage of it. Or, for me, I've been out of the markets for a long time. And I'm an ex-stockbroker. I have a high level of comfort with this stuff. And I don't own any. That should tell you something. You, of course, have to do what you're comfortable with. But yes, they're going to print money up the wazoo. We are going to see the stock market soar again, I'm sure. I could be wrong. Time will tell, and just pay attention. Don't go jumping in the stock market because I say it's going to soar, because what that is a flight away from the dollar.